Okay, let's recap this Silvergate Bank debacle. Silvergate Bank was founded in 1987, and they got into the crypto space as a way to increase its deposits versus its loans on hand. The bank was among one of the first U.S. institutions to embrace the crypto space and began its digital currency initiative back in 2013 before eventually going public in November of 2019. Now, the timing couldn't have been any better, as it was about to surf the next crypto bull cycle, and it rode the cycle all the way up until roughly the fall of 2021, and that was the start of the crypto winter. Now, Silvergate Bank eventually became the most shorted stock in the U.S. It lost $1 billion dollars this past fourth quarter of 2022 after the FTX bankruptcy. And as a result, a bank run commenced in which investors pulled out over $8 billion dollars by the end of 2022. Now, with the stock trading at all time lows, the smart money saw it as an opportunity. Citadel Securities, well, they hold a 5.5 position percent position in the company. Susquehanna Advisors Group, they took a 7.5% stake in Silvergate. And then in January of this year, BlackRock, which is the largest asset manager in the world, where they have assets under management in the trillions, they took a 7.2% stake in the company. So while the smart money was loading up, the shorts were making bank. They amassed a roughly $1 billion payday as price dropped from the roughly November 2021 peak. We saw this week the FDIC went to Silvergate's headquarters to see if it could assist with salvaging the company, but we got word on Wednesday that the bank announced that they were closing shop. So I did a video 2 weeks ago, and we're going to recreate the crime. So in that video from 2 weeks ago, I had this monthly downtrend line. The zone where the weekly sellers, that did not change. And if we go to the daily chart, I put on a short term uptrend. In that video from 2 weeks ago, I said that price was holding this short term uptrend, but price could breach the short term trend if crypto continued to decline. Now, because the smart money was loading up, I felt pretty good, and I said that you could start dollar cost averaging, right? Building yourself a position. But for the conservative folks out there, I said it might be better to wait until price closes above the monthly downtrend line. I also said that really the first test would come at the weekly seller zone at $27. Why? Because we had two separate rejections. So this candle was green, and then the sellers took over. Price got rejected even before we got to the zone. And then again, this candle opened and went down red, or went up rather. So it was green originally and then closed down. Got rejected twice. So that was a concern of mine. Now, I did want to put on a position, but I wanted to see accumulation taking place. Meaning, I wanted to see a base being formed. To give me confidence that a floor was in. And potentially by that time, price would have breached the monthly downtrend line. And if we had formed a floor, well, then I would have been more confident that price would eventually break the zone at $27. And what do I mean by a floor, right? So at the lows you have your what's called the accumulation phase, and kind of like at the tops you have, if I go to the daily chart, you have this distribution phase where folks that got in at the lows are starting to sell before it eventually went down. So I was hoping to see the reverse before considering taking a position. But the fact that price breached the short-term uptrend line kind of gave you an indication that price was breaking down. You also had the moving averages start to accelerate to the downside or turn downward, giving you more of an indication that price was breaking down. And the long drop was on the announcement that they were closing shop. So I guess what's the moral of the story? Well, two things. The smart money is not always right. And investing or trading, you have to be patient. One way, if you don't want to be patient and you're a bit aggressive, yeah, you could have took a position. You could have dollar cost averaged. But at no point should you ever invest more than 2% of your portfolio on a trade. That way, it will allow you to sleep at night, win, lose, or draw. Until next time.